Hey guys, it's Will. So we see some sell-offs at market open and in throughout the whole entire day today. Most of the stocks sold off. We did a review on Rigetti. We saw a big bounce earlier on this rising support level, and then they shot up to $18 a share, and they sold down. That's a quantum company we were trading recently. We also traded AMD stock, and AMD absolutely continued here down. Now we have some long-term positions on AMD stock, and also CTM was moving today. But I was sitting back in my chair this morning. We were watching the market sell off. We were waiting, we're waiting, we're waiting. We see this dip, and then we bought the dip. I think it was on AMDL, which is more AMD based calls. They're a company that is competing with Nvidia. So they are a tech chip company and data center company. And, basically we see the market continue and continue to sell off. Then we see, I think it was Palantir had a really big drop today. Look at that correction on Palantir. It's funny like that it happens now. I've been saying this was my last analysis of Palantir is saying I think it's going to correct 20%. Now it actually continued to rally up to this 190, and now it's correcting down. And I think maybe we're going to see that move like this. I mean, that's pretty bearish outlook, but I've been kind of looking for that correction recently, and they sold down recently to that resistance. So we'll see if they hold there or if they continue up. But there's just a lot of anticipation of Fed meetings, of the interest rates and things like that. But the number one thing that in an up market we're excited about is that our long-term positions go up, and that our tech companies we invest in, or our space companies, or our quantum computing companies, or our defense companies, they go up when the market goes up, and it's awesome. And then what happens? The market goes down. Now, what do we do when the market goes down? Well, it's possible we are going to enter more of a broader, large time frame of corrections until maybe the next Fed meeting. And if we see SPY, which is the S&P 500, we saw a V-shaped pattern, which I have never moved to this stick here, this white stick. I remember it was down here around 479, and we had a video come out, and I said, guys, this correction right here, we're probably going to see a V-shaped pattern like this, just like we did back in 2020. Where's 2020? There it is, just like that. And that's exactly what we saw. And then we saw it rally more, and we see a correction today in the markets. So this is kind of what we saw like 2020, similar crash that we saw earlier this year, after the elections, and then into February until April. The whole market was really selling off, right? And that was 2020 when March or February really until April as well in 2020, around the C word, when that whole thing happened. You had a V-shaped pattern, and then they get into mid to late August and right into September, and we had a large correction, right? So we had a large correction down, in SPY at the time. It was like, oh, are we done? And it was a 10% correction, something like that. So we haven't had that correction since the rally from the bottom of April. So now, we saw maybe a little bit of a correction right here, a 2% correction, but we haven't seen what most investors kind of have been like, hey, what are we going to see? Are we going to see a sell down like this? Maybe a 10% correction, something like that. That, or even down to this previous support. Maybe we see something like that, 5-10% correction. And what do you do in that instance? Like, do you sell your shares? Probably not. You want to add to your long-term positions. At least that's what we do. I remember the first time that I ever shorted the market, it was back here in 2020. And it was right here. I was in California. I had a pretty good pulse on COVID and things. And what happened was, we ended up doing what was, SOXS, or trading against the market. And we were able to ride the downtrend, to really hedge against the downtrend for a bit, to make money on the way down. And so what we like to do, for example, you could look at Nvidia, or you could look at AMD. They've made some big runs recently, and we've we've capitalized on those runs. Like you see AMD, we're up 60%. APLD, we're up. Like these are semiconductor based. In Nvidia, we're up. And you got Nvidia at an all-time high. When you see a correction in big tech, so the biggest companies that drive the market, so we're talking Nvidia, we're probably Broadcom, they provide the microchips for Apple and Google. Nvidia provides for a lot of other companies, Tesla, Microsoft, and what have you. We're looking at what could be an opportunity to then maybe trade the inverse over on the chip stocks. So a lot of times what we'll do is we'll go over to semiconductors. So semiconductors, they power a lot of that AI boom that we're in right now. And this is back in February and into April, right? This while the market was crashing that we kind of went over, SOXS actually went up 200%. And this was one of our biggest trades of the year that we kind of hedged against that downswing in the market. When the market went down, this fund went up 200%. And so we've seen it, it historically it's going to be, downtrending. It's going to be going down. This is more of an advanced, hedge slash, if you're just getting started as a beginner, you would want to, only do this if you're already holding some of the semiconductor market bullish, like you're invested in Nvidia, or you're invested in AMD, or you're invested in Broadcom, or the bigger tech market. And so semiconductor shorting would make sense in times of uncertainty or in a market correction. So we saw a push up today on SOXS. They kind of found a bottom. We didn't see a 200% swing, but we have seen this uptick of about 10% over on SOXS. Now we have traded some swings like this too, shorter, that are like 20%. And so if we see a market, let's say pullback that's pretty substantial, maybe we see this 10, 20% uptick, or even something like this where it just surges over on SOXS. So we like to trade this company. It's definitely one, not this company, this fund. It's definitely one that we can hedge against the market selling off. So that's the breakdown. That's something we love to do. Hopefully that's helpful for you. And just realize, that's part of the market right now, is that when we see those pullbacks in robotics and in space tech, most people panic and they tell you to sell, or they tell you it's too risky, or that you shouldn't bet your money in the stock market, that you need to not be looking at the stocks because everything could be at the top and stuff. What they don't tell you is the multiplication of value and the compounding growth of AI and the compounding growth of these companies. That's it. Inevitably, we're going to see these stocks go up. If we see a correction, it's gonna, that's part of the game. But when it comes down to the assets, inflation is a thing. What happens with inflation? Stocks will always go up. Real estate will always go up in price. Okay, could you see corrections? Yeah, so they lower interest rates. Stock market is going to go crazy because all these companies, they can get funding now easier, and then also investors maybe can borrow money easier to invest, things like that. Sure, but regardless, the best thing you could do in times of uncertainty is oftentimes own assets. And so we're still holding and adding to all of our long-term positions. So some of the top companies in AI, top data center companies, and things like that, we are looking at adding to positions at this time. But we're not going to bet big on a recovery always into these stocks in one short-term trade, because the overall market direction could be in a correction. So when that's going on and you see that correction taking place, we don't need to bet big at the top. We could simply, keep dollar cost averaging, keep also looking for maybe these opportunities to hedge or make money on the way down. And then when we get more of a clear sentiment in the market that things are recovering and going up, that's when we oftentimes will identify very clear trends. Because right now, what you're seeing is a little bit of break in pattern in certain companies. And when you have a very consistent uptrend break its pattern, oftentimes what that's going to mean is we could see a reversal taking place. So for example, AMD, we were riding up to $190 a share. Maybe they were in a perfect trend here where they were holding above this rising support, holding above the 200-day moving average, and using it as a support, and finding higher highs that were acting as resistance, and using previous resistance as support, which is part of the greater trend. We see that, and it's actually at a support right now, which we could see if it kind of holds at that $160 price point. That's a previous resistance that acted as a support, which we see oftentimes in a bull trend. And so with AMD, it just kind of broke pattern. It's sold below. It's now consolidating more. Kind of see that on, for example, Hood stock. Hood stock, it was in a very, this is Robinhood stock. They were in a very consistent pattern. And then now they're consolidating out from, rather than being perfectly straight, they're now consolidating out. In the 3 stages to reversal, you have one direction of the trend. Okay, so you got one direction of the trend, and then you have the consolidation phase, and then you have the reversal in whichever direction it's going to go. So basically, we had a very consistent pattern here. You could see a very, very consistent pattern on Robinhood stock. And I'll get rid of these extra lines. You kind of see very consistent pattern, rising support, rising resistance. It's kind of textbook. And then what happens? Oh, now we're seeing this happen. We're getting this this consolidation from left to right, something like this. You got this level, you got a resistance level, and then you have this resistance here that's then kind of trying to act as support. And we're saying, oh, are we about to consolidate here, maybe from left to right, as they are consolidating right now? Here's kind of a previous resistance zone right here, previous resistance acting as support. They're kind of consolidating now from left to right. They kind of double topped potentially. Now we got to watch, say, okay, do it's just a stall and they continue to rally, or do we get this 3-stage to reversal? Then maybe what happens is it breaks below, and then we start to see the new trend in that direction. And it's possible that we could already see that happening now. You can kind of see, like with Robinhood stock, for example, you got this trend here where it's kind of maybe downtrending. See this? It's like starting to maybe downtrend. So maybe we get a recovery, but direction, it's kind of like a fake out, and it just continues down, something like this for a while. It doesn't have to be aggressive, but that's the aggressive move we see today that kind of shakes the market a little bit. So this happens time and time again. They say, oh, it's gonna recover, it's gonna bounce up, but it's actually could be a correction in disguise. So just keep that in mind, that we could see a larger correction potentially. And in that case, again, adding positions, but making money on the way down is the name of the game. So we do it oftentimes in stock mates, is we're looking for those moves once we really determine direction. The last few days, few weeks, we've been kind of shaky around, is this the top? Are we seeing what's going on here? Stock's kind of stalling a little bit. Not the best week last week for most investors to be looking at the markets for a bullish outlook, because you see this kind of consolidation, little break in pattern. And so that's something that you got to keep an eye out for, be aware, so that when these opportunities present themselves, you're able to make a profit. So we'll be there tomorrow morning. If you want to join us live in our daily live session, it's going to be the second link in the description for Stockmates. And just a friendly reminder, the lifetime access for the daily live trading, where you could see our entries and exits, see how when we buy, when we sell, what companies we're watching at market open, and when the moves happen. You could see what's going on and learn about technical analysis. Right now, you can get lifetime access to it for into September. And September 1st is when the lifetime access, we're no longer doing it. It's going to be kind of aligned with how we operate, which is recurring. It's Monday through Friday, which would be more of a subscription model. So if you want to lock in, not a subscription model, but it's the lifetime access, it's the second link below. Hopefully I earned your thumbs up. Do hit the like button if I did, and do consider subscribing. I'll see you in the next video. Thanks for tuning in.